Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of March 25th, 2024. Today we're going to talk about where we are in the S&P 500 year to date and what we did last week. And we are going to discuss the different sectors and how they have performed and what they look like going forward, and the economic data that has come out last week and is going to come out next week. And then we're going to jump into some live trades on the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can do me a favor and hit the like and subscribe button, it really helps out the channel, so thank you very much. I think it's super important that we understand all the strategies and tools that the rich are using to get richer. Then we can use those same tools and strategies to profit safely in any market. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. We also have a paid course. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, we started the week in the S&P 500, the SPX, at 51.17 and ended up at 52.34, so fairly flat last week, and we're up around 9.9%. This is the 5-day chart, and year to date we are up about 9.9% year to date. If we look at, actually let's look at some of the economic data that came out last week. Fed Powell last week spoke, and he kept rates exactly where they are and said that he still expects 3 rate cuts later this year. So if we go to that Fed Watch tool and we look, there is a 66% chance of a rate cut in June. May is still 5.25 to 5.5 where we are today, 87% chance. So June, everybody's looking at a 66% chance of a rate cut. If we look at the FactSet earnings report, let's go to page 1 and zoom up. So Q1 2024, the growth rate for the S&P is 3.4%. The valuation, the 12-month PE going forward is 20.9, and the 10-year average is 17.7. So we're a little bit above that today. And then if we go out and we look down further at here we go. The S&P 500 for Q2 is expected earnings growth of 9.3% and revenue growth of 4.7%. So much better, and then improving every quarter. So 2024 calendar year, 10.9% earnings growth and revenue growth of 5.1%. And for 2025, even improving more, 13.3 and 5.9. And then I like to look at the PEs and what are good values. Here we go. Still, if you look at the forward PE, energy is still below the 10-year average, as well as utilities, and real estate is below the 5-year average. I don't think I spoke about what's coming out next week, or this week, this coming week, the 25th, but it's basically Friday PCE, and this was last week. If we look at Friday, we've got PCE, core PCE expected 0.3% versus 0.4%, which was the previous. So little bit better. The fear and greed index is still very high at 72. So, with that market moving up almost 10% so far this year, and then being up the end of last year, we're still pretty high, and with the high PEs. If we look at the 5-day and what happened last week, everything was up except really real estate was down 1%. And then year to date, everything is up big. Communication services 12%, energy and financials are up 10%, technology 9%. So that's where we're at. So let's jump into the trades that we have. All right, so the first one that we have is Adobe, and Adobe took a big hit. Let's see. I don't believe that the reason that it's took the hit really makes sense. KeyBank came out. They're an analyst, and they came out with an underweight rating due to generative AI. But again, I've done videos on this on Adobe. Check out the video. But I don't think that that's going to cut into Adobe's business. They're the go-to for video, and there's much more needed than generative AI after the generative AI is being used. So Photoshop is going to be continued to be purchased and renewed, and they're going to continue to do well. They beat on both the top and bottom lines on March 14th. So, but again, they guided lower. They're always conservative, and they always beat, and then the stock gets hammered down. But I'm staying long, so we're at 26 days to expiration. I'm just going to roll these positions probably the end of the week, around 21 days. So I'll close them out and roll to May at that point. I've got a much higher target in the mid to high 600 range. So I like Adobe long, and I'm going to stay long. AMD has gotten hammered as well. It's at 179, down from 191 last week and 207 the week before. So all the AI, with the exception of Nvidia, have gotten hurt. Nvidia did introduce a new AI chip that really increases performance while reducing energy consumption. So I think that brought down AMD when that came out. But I'm going to stay long. End of the week, I'm going to roll my positions to May. My target for AMD is much higher, and most analysts are much higher too, in the $200 range. Chewy, it's at 16.62. Actually, you know what? Let's look at AMD really quick and the curve mode. I just want to see where, yeah, we needed to move up to 192 in order to be profitable. So, okay, Chewy, 22.5. Let's see where that, we're still in the profit range, believe it or not, with our 22.5 straddle at 16.5. So I'm going to just stay a little bit long in Chewy. I think they're going to continue to do well, and I'll just roll to May. And again, I'm rolling pretty much all these positions the end of this week or beginning of next week. But I'm going to see how that around that 21-day mark is when I like to roll. And I put trades on at 30 to 45 days. But Chewy is their growth is slowing, and that's why they went down. But they actually beat both the top and bottom lines on their earnings last week, and the stock got hit, but due to the slowing growth. But I think the pet category is going to be huge, and my target for Chewy is much higher, than where it's at today at 16. It's up in the $25 to $30 range. DraftKings has done really well for us. It's at 47, and I've got 2 leaps options, and then I've got calls that I wrote against them, and the stock keeps going up, so my calls got hurt. But I'm gonna do the same. I'm gonna roll those calls out the end of the week to collect more premium and stay long. So if I roll out to May, and I use the regular options, not the weekly. So if I did that right now on these, rather than take that $300 loss, I'd collect another $166 right here. So that's what we can do, just keep rolling those things out and collecting more premium. And eventually with that premium that we collect, we bought these leaps options for free. But I love DraftKings going forward. Just over the last 30 days, we've made 224 bucks. GDX, gold miners. Gold has been down, so been long with leaps and then selling a call against it. Same strategy over the last 30 days. We made 145 bucks. I think it's still at lows, so I'm gonna keep the poor man's covered call on. And yeah, you can see it's at lows, but it's moved up recently. This is the moving average. Is it the 1350? So 13-day, and then the 50-day. And when the 13 crosses the 50 moving up, it's definitely a bullish, in bullish position. Google has done, actually it moved up quite a bit. I've only got $46 left in extrinsic, but we're up at 150. We've done well in Google. So over the last 30 days, we made 580 bucks. And definitely long Google. It's a behemoth, so I think the 180 to 200 target, I'll roll that at the end of the week and keep that trade on. The Russell, we're still in profitable range there. Yep. And over the last 30 days, we've made 254 bucks. So long the Russell, 205. My target for IWM is just a little bit higher, around 210. But I think it may go higher than that. With the interest rate cuts coming, I think everything's going to go higher. There may be a pullback before that happens. We'll see. LIII Harris, still up over 210. This one's been well for us, kind of a cash machine. 30 days, we've made $774, and just 180 days, we've made $1,454. So doing pretty well in LIII. I think they're a great defense stock. My target is 240, and we're at 211 right now. So I will roll those. I've got 3 on, and you can see we're profitable anywhere above that 208 range. Lulu got hurt last week on earnings, but I think I'm still up on Lulu. Yeah, 121 bucks in the last 30 days, and I don't know how that is, because we dropped down to 400. But I am going to, I kind of did that as an earnings trade. It's not super liquid, so I'll check out and see if I'm going to keep that position on. After it dropped 15% on Friday, it beat on both the top and bottom, both on earnings and revenue, but it guided lighter. So that's what happened and why it dropped. So we'll see how that comes back this week and see if we can maybe roll forward, see if it makes sense. Mara is a Bitcoin miner. We've got the halving event coming in April. I've just kind of got that on there as a flyer, small $5 wide put spread. I want to keep my eye on it, but I have Bitcoin in another account, so I thought I'd just play with Mara here. They've got earnings coming out on May 8th. And yeah, I think we're down in the last 30 days. Yeah, down 81 bucks. So we do need it to move up to this 22.5 range, and we're just below it, almost 21. So there may be a tick up prior to that halving event coming, but I think they've got a great plan going forward. ServiceNow actually has earnings, I believe, coming up. Yeah, they're on 420. Oh, okay, not until April. 424, and then our expiration is 419, so it's before the earnings announcement. So that's right. That's why I put this on 688.40 Iron Condor, and you can see the huge profit range that we have and no earnings event. So I expect it to stay in that range. It's moved up quite a bit, so I don't expect it to blow up to 840, and we can go all the way down to 675. So all the way from here basically to here, we're profitable, and it hasn't moved that much in the last couple of months. So I think ServiceNow, we collected over 200 bucks, $222 in ServiceNow. Nvidia, wow, up to 942. It jumped up big, so we're up $182 with our $10 wide put spread. We've got 133 left to go in Nvidia. They're a behemoth, but yeah, that just in 30 days we've made $182. I haven't had Nvidia on because it was so high, but I just put it on March 8th and collected $315, and yeah, we've just got 133 left. Palantir, it was down, took a little hit, so down a little bit, not a lot, but kept that. I think Palantir is going to do great going forward. I think over the last 6 months, yeah, I made 719 bucks in Palantir, but I've got a LIII option and then a call, so basically a poor man's covered call against Palantir, and it's a huge growth stock that's going to continue to do well moving forward. The Qs is just a hedge. Tech is up, so I'm beyond my 440, 450 spread, so I'll see about rolling that if I can for a profit. Out to 54 days right now. Yeah, collect $7, not a big deal, but hey, at least I can roll it out. I may just take it off. I think with the 3 rates cuts coming, everything priced in, I mean, something can happen, so it's nice to have that on, but we'll see how I'm going to hedge going forward. SoFi has been hurt, 7.3. I've been just accumulating LIII options against SoFi and getting killed so far. But it seems like every time after earnings, it shoots up, and it'll be profitable. And I'm confident over the long term. And my LIIIs are way out there, and I think SoFi is going to change the banking and do really well. So I'm going to stay along SoFi. Square is one that I'm looking at placing a trade on. They've got earnings on May 2nd, so I may just do a small trade in April. I don't think it's going to go down much further, but it's been hurt. Wow. Oh, that was SoFi. So here's Square. No, it's doing okay. It's moved up a little bit over the last year, but it was down big. But I think they've got some good things going. Jim Cramer had the CEO on, and she talked about all the good things, of course, that they have going. And the Ivy rank is decent, so I would like to have something on in Square, so I'll probably throw something on. I've got this as a placeholder when the market opens on Monday morning. Right now I could collect on a $3 wide, I could collect 95 cents. So $95, basically 1/3 the width of the strike, which is what I like to shoot for. SQQQ, I'm looking to close out. It's not doing well because tech's been up, and I think it's going to continue to do okay. So I'll probably close out that. I'm going to probably just have mainly long and neutral positions on, and then have cash on the side in my option trading account to invest should there be a drop. Except these two, TLT and TMF, they're down last week because the market was up, but these are long bond positions, and you can see I've got leaps on both of them. So as interest rates come down, these will do much better going forward, and you can see they've been down. There's TLT, and TMF is the same. It's been way down. So I think, as interest rates come down, those will move up and really do well. Tesla has been hurt. It's down at 170 right now, and that's from actually it was up. It was at 163 last week, so it's actually moved up a little. But it's all the EV stocks have been hurt, and they've got earnings on 4/17. I've got to figure out what I'm going to do prior to expiration on 4/19. I may close these out and just roll to May, and maybe just have one position on. Verizon, huge dividend. Whenever it's down, it's hovering. It's stayed around that $40 range for a long time. You can see. But with that dividend, I just own the stock outright. Wells Fargo, banking's done well, so we've done well in Wells Fargo. I like the new CEO, and I like to keep my eyes on the banks, and we've got the poor man's covered call on, and my target for Wells is about where it is right now, actually. And then ExxonMobil's done great. Oil's been great. It's up now, I think $80 a barrel. If we go over here and look at the market, oil $80, yeah. So it's up big, and ExxonMobil has done really well just in the last 30 days. In the last 30 days, we made $657. All right, so let's look at, I didn't really take an advanced look at this, but let's look at all earnings and then sort by date. And wow, there's not a lot listed here, but GameStop on the 26th, it's a Cintas, I think. Yeah. And then Carnival, so the biggest cruise line, was this Paychex, yep. And Walgreens Boots Alliance are coming out, so I'll look at these. None of them are really my favorites. Definitely not going to trade GameStop, nor Cintas. Carnival I'll have to look at. How's Carnival done? Let's see. Yeah, it's been up, so it's probably improving quite a bit. That may be a good one. I'll look at what's happening there and see if I might make a trade. Wow, Walgreens Boots Alliance has been down over the last year. Okay. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Join Moomoo, get your 15 free stocks. Remember to hit like and subscribe. Leave a comment. Let me know what you're trading, any questions that you have. And thanks for watching. I'll see you in the next one.